Hello everyone, Dr. Stock, Doctor of Education, and I'm glad that you're here. In this video, we are talking about the way the market positioned itself. The SPY, the NASDAQ are the two that we're going to focus on because tomorrow's the CPI release. And I've put up a lot of videos about that, and I've talked about what consensus is and what can happen to the markets and what my expectations are going into tomorrow. So we'll see if I'm right or wrong, but I still want to talk about where the markets are at because I think it's going to be either very, very good from where we're at in a bullish sense, or it's a place that we can tumble pretty hard in a bearish sense. And like I said, that puts us in a very interesting place in the markets. That's what I have for you. Let's get right into it. The first thing that I have for you here is the SPY, and you can see this little inverse head and shoulders thing. I talked about that a long time ago, and I was like, hey, if we break the neckline, we could really take off for this thing. And so far, it's not a perfect pattern, but it's a pretty good one. And, we did end up breaking above the neckline, which sits right about here. I'll zoom in so you can see a little bit more of it. There we go. And we actually closed the market out on Friday right at about that neckline. And then today we moved up from that. Now, even more interesting than that is this little bullish flag that we have going on here. And, what we have is the higher than usual volume, not ignitingly so, but it still is pretty good. And then we do have the tapering, more consolidating volume following that. And, well, where did it land us? It landed us right at the top. Let me grab my drawing tools and I'll show that to you. So slap a trend line across the top of that. And one more. There we go, coming across the bottoms here. So it's a little bit wide. There we go. We got that. And then one more. We need the flag post to go on here. There we are. So that little formation that you see is the flag, and we can actually take this line, the flag post, and put it up here, and that gives us a good idea for where we might land. So let's zoom out a little bit and see where that puts us through this previous peak over here at about 425. That's where we hit resistance before. It's possible that we run into it again. That's if we get that bullish movement in the markets, and that would assume that tomorrow in the CPI that we get a read that's well below the current consensus. And for whether it's core CPI or CPI for all items, right now I believe the consensus for both, last I checked, was at 0.4% month over month, which annualizes to 4.8% year over year. So if we come in well below that, things like 0.1, 0.2, that would be incredible for the markets. So those would be very low reads. Now, mind you, remember that all items for CPI, if you watch my other videos, it is the more volatile of the two, having food and energy in it. When you take those out, you get a lot less volatility, so a lot less subject to big changes in core CPI. So that's one that it came in last month at 0.3 month over month, and that for this month, it's expected to come in at 0.4. So that little bit of a shift away from that would be sort of reasonable. Sticking around that 0.2, 0.3, 0.4, I think is what we're going to see. Coming in at 0.1 would be an incredible drop in prices. And being that we have service inflation that tends to be a little bit stickier right now, and Jerome Powell telling us that we haven't quite seen that service inflation start to inflect downward yet, then we could really see that keep the month over month values up for core CPI and for CPI with food and energy, so CPI for all items. So we have, if we go over to the NASDAQ, looking at the cues for that, there we go. You can see an even nicer little flag pattern that we have here with a better volume spike taking place. And so we'd have a similar drawing on this one as well. So we had the flagpole, and then we had the flag, there we go, formation this way. There we go. And just to make sure that I get the heights right, so if we come off of that for this next candle, like I said, it doesn't mean that we move up this far all in one day. Although for this one, that would be 3-4%. It is possible. Like if we get a good enough beat on CPI tomorrow, that means I'm wrong, because I think that we're going to come in at or above expectation. And, the more I look at the news, the more I think, maybe this comes in at consensus rather than above consensus. I don't know that it comes in below consensus, though. That's something that we're going to have to watch and see as it plays out. It really depends on that services part of it. I think that's going to hang on. And I think food and energy are also not going to be as kind to us in January as they were in December. So we're going to have to watch that, see what happens, see what comes out tomorrow at 8:30 a.m. That's Valentine's Day. So hopefully you're prepared for that day, not only in the stock market, but also at home. If you got some sweetheart or something like that you need to dote upon, please do so. Don't forget about that while you're tangled up in the financial markets here. So the CPI for tomorrow, as per the charts that we see in the SPY and the cues, it looks like we're all set up that in the event that we get a good beat on that, we have an incredible breakout opportunity, depending on how good of a beat we get. Like I said, if we come in at 0.1 or 0.2, reads like that would be just incredible for the markets, especially in core CPI. That's the one that you want to watch mostly. And then we'll also see if we went negative in CPI for all items, that would even be even more incredible. Now, based on the history and the historical analysis that I've done for CPI, you don't really get too many negative reads in core CPI. However, you do see it more often in CPI for all items. So I don't think we'll go negative. As a matter of fact, I think we're going to come in, as I said before, at consensus, but watch for 0.1 or 0.2 in the event that I'm wrong, because I've been wrong before. I was wrong about today. I thought today would be red, and instead it set us up for a fresh breakout tomorrow in the event that inflation comes in lower than expected. If we come in as expected, we probably drop a little bit from where we're at, moving down from the current trend that we're on. And if we're up above that, then we could drop a lot from where we're at right now. So again, looking at the SPY and the Qs, I'll stick on the Qs since I'm here. We have this little support line right here, and we could also draw on another one right here where we'd have those areas of support and that area of support. So being at 304 and dropping down about $8, if we come in above consensus, I think a 3% drop in the NASDAQ would be awfully reasonable, because that could signal that the Fed is going to continue to increase rates. And that is something that we absolutely don't want to see. A lot of people think that they overdid it already and that we need to just slow down and wait and see everything take place throughout the economy before taking further rate hikes. However, as of right now, there's not rate cuts expected in 2023. So we're going to have to watch, see what happens. Now, I do want to show you just one other thing. Let me get rid of the drawings on here. There we go. Because I don't like to have too crowded of a chart. So coming off this previous low to that previous high, there we go. You can see that we open right at the 23.6 Fibonacci retracement level. So that could also serve as an area of support for us. That's if we come in low. That's if you trade on the Fibonacci's. Other things that we could look at are the moving averages themselves. Depending on if it came in really hot, that we'd have an even bigger drop. Now, mind you, 3-4% in a day, whether it's up or down, is an incredible move. With the NASDAQ, it tends to be a little bit more volatile because it has tech in it. So we'll have to watch and see the sort of movement that we make in the NASDAQ based on the report that we get. Coming in at consensus, I don't think we move that much. And if we do move, it's downward. That's my take on consensus. If we come in above that consensus for a CPI read, especially for core, that's something that will move us strongly down from where we closed today. So when we take a look at the SPY, we could put the Fibonacci retracement on this one just because we had it on the last one, go from low, go to high. And once again, let me zoom in on that. You can see that our low price came and tagged. As a matter of fact, our previous close was right at about that Fibonacci retracement level. So that is currently acting as an area of support for us. And if we do tumble back down, let's say we hit consensus, we could probably settle right back on that line. That's just one way to look at it. It also is where these values before peaked out on us. So that could even be further evidence of support should we come down from that level. Now, this top line, being that it's at the top of a peak, would be an area of resistance should we get a positive CPI read. So we're going to have to watch that. So let me summarize this. The markets, CPI, and the Fed. So the markets, if they come in at consensus at that 0.4% month over month, and I'll specify to core right now because, like I said, we have more volatility with all items for CPI. So just talking about core, comes in 0.4%. We see some softening in the markets. I think the markets moved today because they're hoping that we come in under consensus, 0.2, 0.3, possibly. If we saw 0.1, like I said, it would be an incredible rally from where we're at right now. I think we would shoot up and we'd see multiple percents in the SPY and the NASDAQ. If we come in above consensus, I think that the markets have a decent sell-off, and like I would say 2%, 3% sell-off in the SPY, in the Q. So for the S&P, for the NASDAQ, I don't think the markets would take very kindly to that at all. Not only does it mean that we see more inflation than expected for something that was already high, something that annualizes poorly, but then it also increases the chances that we see further quantitative tightening from the Fed. So in summary, I still think we either come in at consensus, maybe a little bit above, and the markets sell off a little bit. If we're surprised to the downside from that consensus, the markets rally, and I'm wrong. And I've been wrong before, and I'm sure that I'll be wrong again. So my goal is, as I look through the different economic data, is to be right more often than I'm wrong. And I think that that's the best that most of us can hope for. So that's what I got for you guys today. If you like my commentary and would like to see more of what I have to offer in terms of products and services, please check out my Patreon. That link is down in the Discord. Come on over and join the community that I have over there and see the work that I've done. And we'd be absolutely ecstatic to have you. Thank you very much for watching this video. Just a few things that are absolutely free. Hit the like button, hit the subscribe button, and don't forget about that notification bell to see anytime that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.